Well, I said it was probably going to be necessary to make another video today, and look how much has happened already in just one day alone. So starting off with the UK, they are just completely falling apart. Remember when the pound started collapsing and the Bank of England had to come in and print all of that money to save their pension plan? And we talked about why this was so predictable, because not only do they have this energy crisis, they have this debt crisis, and their response to these things was to cut taxes and reduce tax receipts, right? And at the same time, print money for the stimulus to help people out and get through. So obviously, this was predictable that the pound would collapse, especially against the dollar, where interest rates are being raised, right? And you're getting all this tightening. So this was entirely, a predictable thing, but they did it anyway. And now that it's all falling apart, you're getting the fallout from it, which is a bunch of, people getting thrown under the bus, basically. Okay. And the reason why this is important is because it's just a small little glimpse into our future all throughout the West, right? The rest of Europe and here in the United States too. And it's like, first, this is a testament of how fast things can break down economically, but then also politically, because heads will roll. I mean, you can see right here, it tells you that British Prime Minister Liz Truss fired her finance minister, Kwasi Kwarteng, and scrapped parts of her unpopular economic package on Friday in a desperate bid for political survival, less than 40 days into her premiership. So with markets in financial turmoil, Chasten Truss said she accepted her government's plans for unfunded tax cuts had gone further and faster than investors were expecting. Look, these people aren't going to take responsibility for anything. They're always going to throw each other under the bus. Do not be surprised when in the future you see more of this stuff happening, especially as the global economy continues to break down, as the macro continues to break down. All of these idiots are going to be throwing each other under the bus, and the bus is going to just run over multitudes of people before it ends up just running off the cliff anyway. In the end, that's where it's going, right? The bus doesn't exactly have a good destination, but it's going to roll over a whole bunch of people on the way to that edge that it's inevitably going to fall off of. But this is just a little taste, guys, of, like I said, how fast things can unravel, and, the political aspect of things too. And it's not to be taken lightly. So over on Zero Hedge, the top article right now is the fact that the Fed had to send via swap line $6.3 billion to the Swiss National Bank because they needed the funds in an emergency setting, which could only equate to Credit Suisse likely being bailed out here. The extent of the damage or any kind of further fallout, we don't yet know. But obviously, someone ran into a liquidity issue. And this is just another taste of what's to come. Because remember, guys, this is all baked in. There's really no going back now, right? We already started down the road. The road is downhill, and there are no brakes, right? So as the further we go over time, the faster we're going to be moving. And so you just got to get prepared to see more of this happening. And that's why it's so important to try to catch these dominoes, these first dominoes as they fall, because they're really the signals that more dominoes lie behind them, right? And so, consider these all little canaries in the coal mine of what's to come. The macro is collapsing in real time, and it's not even the worst. See, because now you've got U.S. Treasury. The U.S. Treasury, this is Janet Yellen's home turf, right? She's asking major banks if they should buy back government bonds, because remember what she had said yesterday, that she was worried about liquidity issues in the Treasury market. Of course, this was a day after she said that she saw no problems in the economy whatsoever, no signs of stress. Of course, she follows it up by saying, look, maybe we should go provide liquidity to the bond market. So this is part and parcel of what we expected too, because remember, I've been pointing this out as well. When the Bank of Japan tried to defend the yen and they dumped $21 billion worth of treasuries. Do you remember what happened? When they dumped $21 billion worth of treasuries to try to peg the yen, what happened? The 30-year bond collapsed by 3%. 3%. It was a 3% move based on Japan acting alone with $21 billion worth of treasuries. Do you understand? This is how illiquid this market is. This is how easily it can be moved. And this is how you know that as more and more nations are beginning to dump even more. I mean, look at the yen right now. It's already worse off than it was when they defended it last time with the last $21 billion. Do you understand? And now you have Yellen coming out saying, maybe we have liquidity issues. Do we need to start buying? Well, the answer is probably yes, because a whole lot of treasuries are probably about to get dumped, and the entire bond market is likely about to completely collapse and utter free fall, which could very well spark even more contagion, even more of a response from the Fed. You may see the Fed step in with some kind of QE in the near future. I'm just saying things are breaking down quickly, and this is why I am so confident. I just know, mathematically understanding the situation, that the Fed can't keep going down this road that they're going on. They keep talking tough, and yeah, they're getting their way for now. They're pretty good at this narrative game. They've got a lot done. I will give them credit where credit is due. They've taken it further than I anticipated they might have. But nonetheless, they're running out of rope here. And all of these things are coming to a head. And they're going to be forced to pivot here. Right? They're just in some way or fashion, whether it's QE or a pause of rates, or maybe they only raise 25 when the market gives them 75. To some degree, something like that is going to happen. It's all but certain. They have to mathematically. Okay, unless you believe that they're intentionally collapsing the entire system on purpose. Okay, and then maybe they do, but I don't understand why they don't just keep raising that 100 basis points or something. If that's the case, I don't know. But the point is that we're coming to the end of this thing, or a better way to say it, maybe the beginning of the end. Okay, because really, technically, this entire crisis is just now getting started. So you got to buckle up, buckaroo, because the best part hasn't even started yet, right? We're just kind of getting through the beginning here, like the previews of the movie, right? So save your popcorn, because the best is yet to come. We're about to get into the charts and check it all out and see what the market action looks like. So let's get to it right now. Okay, we're going to pick up right where we left off with the bond market, all right? So remember, we talked about these upper wicks being kind of interesting, because across the board, you got this bad CPI print, right? And initially, the markets were doing what you might have expected. You were seeing yields rise, the markets rolled over, and within an hour or two of the opening day of trade, it all kind of reversed. So you got a big bid in yields. The markets got bid, everything kind of got bid, with the exception really of gold and silver, which kind of closed flat. Everything else closed up and in the green. And I was kind of curious, and almost a tell for me too. It was like gold and silver knew better. But it is interesting today, because you're getting more of what you would have expected, right? So you're getting the broad sell-off. Pretty much everything is red. You're getting a bounce in yields, all right? And so you can anticipate more of a collapse in these yields here, as other nations like Japan undoubtedly are about to sell off even more of their treasuries in an already illiquid market. This is another crisis waiting to happen. You can see it coming a mile away. They could very well force the Fed's hand here to get involved and do some kind of supplementation of liquidity. They may have to step in and do some buying. And this alone, I think, would be a clear pivot, because they have promised that they wouldn't do anything like this. If the Fed steps in and saves something, okay, if they step in and intervene, then that's going to be a sign that the Fed is there, that the Fed is there to catch, okay? And that's, first of all, that's all gold needs, all right? The broad markets, maybe, I don't know, but that will certainly be a boon for gold. And it's for this reason that I still encourage accumulating, because you just don't know what's going to happen here in this kind of unpredictable market right now. Gold and silver are really the only things that save maybe oil, energy broadly, that could really rebound despite the rest of the market, right? They could kind of pave their own path. Everything else is going to be pretty risky. Okay, so it's for that reason that I am still encouraging accumulation where we are right now in gold and silver, despite knowing that we could sell off with the rest of the market, maybe another 10-20% lower than where we are right now. But it is understanding that risk and understanding the options to go both ways that I have made my decision and presented as such. So as long as that's clear for you, we can move forward. But looking in the broad markets here, looking at starting with the S&P. Okay, so just taking a look at the S&P, I had left you off on the weekly chart telling you, look, if you have trouble getting above this 200, you're going lower, okay? This is the killer. This is the key. So just look historically at what happens. I mean, this 200 is always a big deal, okay? You either kiss it and leave, or you crash through it, okay? And when you crash through it, you fall quite far. So this is a big deal. All right, so it looks like we are going to lose the 200, which means the broad markets likely are going a lot lower. This is my call. I don't see any reason not to believe that this is the case. I mean, you're seeing confluence in all of the names. Excuse me, wrong chart. So, you know, you're getting denied in every indice at these key levels, these big upper wicks. The macro is breaking down. Yes, the markets are oversold, but geez, they're not as oversold as they probably need to be. You know, the market has done a pretty good job of pricing in a lot of this stuff. But again, it's not just about the United States markets. And this is what people are screwing up. This is about the global market. This is about contagion. This is about fallout. This is about risk. And as these other nations struggle with all of these problems, it runs a lot of risk of things really breaking down and all these dominoes falling on each other. Okay, so you have to appreciate that. I think that the market is starting to do just that. And it's hard to see the markets getting any kind of a meaningful rally as long as this reality exists. All right. And so, again, I think we're kind of just at the beginning of this macro meltdown, and we're going to see a lot more to come. So the broad markets, I think, are rolling over. They're going to continue rolling over. It would not surprise me to see a bit of a Black Monday. With that being said, if we try to pinpoint where we might land, I mean, 3,400 and now is only 6.5% away, which isn't that far. But it's still a good contender for a bounce. Beyond that, you know, 3,000 looks pretty good. All right, here's about 30.27. You got nice horizontal support. You know, it's 16% lower. That feels like that might be a pretty good downside kind of target there. So let's shoot for that as our next two targets, 3,400 and say 30.50. All right, we'll see what happens when we get there. And by the way, guys, these are just more bellwethers. You know, we had talked about AMD and a lot of the chip makers yesterday. And look, they got denied. Remember, we talked about this critical area getting denied multiple times, now getting turned around, not only at the horizontal, but also out of the channel as well. I think long term, guys, we could see downside as far as $36 on AMD. And let me tell you, if we can get down that far, that's going to be just an extraordinary opportunity. It's just going to be incredible. And if you have the patience to wait and the confidence to strike if we get there, because it might be really scary when we actually get down there, right? But if you can look to these things in advance and anticipate them this far out, you know, get Intel at $19, $20, right? Get NVIDIA somewhere around $74. Guys, this is going to be, you know, TSMC, $45. If we can pull this off, these are going to be the buys of a lifetime. All right. These are going to be just amazing, especially if we can get the timing right. Because, you know, it might not go straight down. It might take a long time. It might take a year to get down to those levels. Right. But in the meantime, if our commodity plays run up real huge, we can rotate, and it just, you know, the opportunity here is big. I want to point it out to you, but I also want to point out to you the downside risk, because in a lot of these equities, it's pure open air right now. So it's just one more level of confluence that the broad markets are rolling over, and just how much more downside we really do have the potential for. Okay, uranium bros, I try to tell you. You know, we're batting just about a perfect score on uranium. Since I started this channel, I have called every single major pivot ever since we started this channel in uranium. We've called all the top pivots, all the buys, all the top pivots, right, with the exception of the Japanese restarts. I missed that one, okay, because that just came out of nowhere. That wasn't in the charts. But all the rest of them, we called 100% of them weeks, sometimes months in advance. We even called all of the patterns, right, well in advance, before they even happened, before they even formed. We called it all. All right, super far ahead of the curve. So why do I say that? It's not the brag, it's to state the fact, because I'm telling you, I've been trying to tell you guys that uranium is such an easy read. All you have to do is open the chart. It's telling you what it's going to do. It's been telling you what it's going to do for so long. I mean, you can do this for yourself if you like listen to what I'm telling you, right? Like, you don't even need me. That's how easy uranium is, right? It's like there's really no excuse to get it wrong. And what I'm trying to tell you guys is it looks like crap. It's like it looks like crap. All right. And it's still, you can't be buying uranium here. Look at this perfect head and shoulders. We're coming to close back down once again on this neckline, threatening to break even further on the Monday open. We'll zoom out and look on the weekly chart here. Again, we're on URA. I mean, you're resting perfectly to end the week here with a strong down candle on the 200. And, I bet you're going to lose it. We're down to $63 on URNM, putting in really the same thing. I mean, this is the great thing about uranium is that it trades in confluence with each other. So once you find these patterns over and over and over, it makes it very easy to have confidence to play them. I told you it wasn't time to buy Cameco yet. We're already down even lower. You can't even think about it until bare minimum $20. Bare minimum. Because remember, we were waiting to come back to buy on this trend line, all right, because this has been very strong. But how many months have I been telling you this? That the trend is your friend and the trend is up until that changes. Well, as soon as we dropped out, then that changed. Then, the situation has changed. And when the market changes, you have to change with it. Otherwise, if you're stubborn, you're going to lose a lot of money. Okay, and so now that the situation has changed, we can assess and say, okay, well, how has it changed? Well, it has changed because we have lost this bull trend. And so now we have to find a new trend. Okay, and the best case scenario would be to have Cameco come back up, retest this trend line, and to get back into trend. That would be great. That'd be a really bullish sign. And then you could just buy that $23 mark all over again as if it were to have come down and stopped on it anyway, right? Makes sense? Otherwise, if it were to get rejected, that would confirm that we are going to continue to lose trend. But it doesn't look like we're going to be afforded that opportunity. It looks like we might just continue accelerating downward. And if that's the case, we got to spot levels of support for future opportunities to buy. And from there, we can deduce $20 and $18. Okay, I think that makes a pretty good buy box. Depending on the nature of the sell-off, you can watch it. If we get this liquidity event, watch how sharp it is. Watch how powerful it is. The more powerful and quick it is, the lower we'll probably go. If it's more of a kind of a gradual thing, maybe we only get to 20 or 19. But if it's real sharp, we might get to 18, right? We might even pierce it a little bit. So that's what I would be looking forward to. Complete nonsense to be buying uranium right now. You're insane if you are. I just don't get it. But I guess if your timeline's long enough, you'll be back in the green someday. NXE, same thing. It all charts the same way. I don't know what to tell you. You had some bullish divergence here on the RSI saying you might have some short-term strength to come up here. But if and when you did, you have immediate resistance. Going to be tough to see it breaking it because uranium likes to trade with the broad markets. So this is why I told you guys that I was probably going to have to follow up today to see what uranium looked like the next day, to see if it had any follow through. And the answer is no, it doesn't. It looks the same as it's looked for a long time. It looks bad. LEUs, it's closing back above this neckline here. I don't know. It's got minimal volume. I don't know what it's doing. It looks unchanged to me. If this was going to be a false breakdown, you would expect to see more. You could say, well, the broad market's having a bad day. Okay, that's the problem with uranium. That's the problem with uranium, dude. Is that the broad market looks like crap and it's going to continue looking like crap. And this is bad for uranium because uranium cannot trade on its own. It trades in confluence with the broad markets. And it's putting in super bearish patterns as the broad markets are putting in super bearish breakdowns below key levels of support, like the 200 on the weekly. It just looks bad, right? So you're going to have to continue being patient with this because the path of least resistance for uranium is lower. Now, I did tell you guys that it looked like I missed something. Okay, so after I posted my video yesterday, when I was putting my timestamps in, I noticed that there is this bullish pattern on SPUT physical, okay, U.UN. So it is interesting because, let's find my little doodobber here. You have this potential inverse head and shoulders right here, okay, with a clear neckline right there, okay? So that stands out pretty well. And you're breaking the neckline. and you were doing it on an increase in volume. So that actually looked like that might have been pretty good. The problem is that you're not really getting any follow through today. I'll give it until Monday. But the problem with focusing on SPUT is that this is exactly the opposite as all of the equities. Okay? And if you look at the American listing, okay, it actually is kind of doing the same thing that they are. You have a single day as the only anomaly making this any different than the rest of the equities, right? Had this candle gone down instead, it would look just like the rest of the sector. You have one candle making it look different than everything else. Do you see that? Right? And so we come back to U.UN, and it's kind of the same thing too. It's just not quite as clear. So you can put this baby on here like this. So you had a single day of up, negating what's otherwise perfect confluence with the rest of the sector for a breakdown. So what do you do about something like that? I don't know. That's very curious. I'm going to have to say that I don't know the answer to that. We're going to have to wait and see. But when you see the broad market trading the way it is, and that's down, when you see the uranium equities putting in extraordinarily bearish patterns in confluence with each other, pointing to down, it stands to reason that those variables are going to win out, especially because, you know, this technically has the same pattern too. It just has an anomalistic day. Whether or not it really is anomalistic, I don't know yet, because we need to see that follow through, right? And incidentally, it is up when everything else is down. So maybe it could have a ride on its own. But, you know, just because SPUT potentially has a breakout doesn't mean that the equities will follow. We don't know that yet either. So it is interesting that you have, you know, all of these different patterns here kind of playing out, the potential to play out together. It's fascinating. This is new for me. I've never really seen anything like this before. So it's worth watching. It's going to be fun to learn together on this one. But to go on record and make a prediction as a base case, I will say that I don't give it the highest odds of a breaking out. Okay, I just don't see how it could. You know, and you still have developing divergences right here. I don't like the look of that either. We can look at the other listing. I mean, it's not a whole lot of tells. You know, we'll just have to wait and see. Just have to wait and see. We still have an hour and a half, but you're not going to get any kind of follow-up in volume. I just don't know if the market has the confidence to chase this. I just don't know. So I'm going to say that nothing has changed in uranium. It still looks bad. It still has a negative bias. And if you're looking to buy, you have to wait. And if you want to hold, okay, that's fine. But understand the downside risk. And we'll you know, analyze this day by day as we go. Just a little bit more confluence here on a buy zone for you guys. If you track Cameco down to its 50 on the monthly time frame, which it hasn't touched in a long time, that brings you to 1764. It gives you a good level of confluence here around that $18 mark, right? Especially because it's not likely going to fall straight down. You know, it'll take a little time. This 50 will move up a little. So you can call it probably $18 if and when it comes down and touches it. So that reaffirms for me that that's going to be a really strong buy zone. And you can probably take the Cameco price of $18 and apply it to whatever equity you want. So if you want global, if you want Denison, maybe just wait until Cameco hits about $18. You know, certainly anywhere in between that $18 to $20 range. I think $20 if you're really bullish and you just have to be in, at least wait for 20. But if you want to try to catch the bottom, I think you got to wait until at least 18. Does that make sense? So you can take the Cameco price and apply it to anything, okay? So you can start at 20, but your really strong buys should wait until at least 18 or a bit below. Okay, guys, so it's time to start talking about oil on a more regular basis. And the reason is because I think we're coming into the correct time to really be looking forward to oil taking the next leg up, meaning that we can start accumulating now in the anticipation of that leg up and not have to FOMO into it later. Okay, and the fundamental reasoning behind this is multifaceted. Of course, you have the war with Russia, which is only escalating worse. So there's no surprise supply that's going to likely come into the market. In fact, we've got OPEC closing several million barrels of production, in addition to the SPR draws that Biden is making here domestically, likely to be cut off after the elections, because it's just a politically expedient play that he's doing to artificially depress the oil and gas price up until the elections. Likely, once the elections come and go, you'll see that spigot get turned off, and it will be one more catalyst for oil and gas prices to accelerate to the next level higher. And so it stands to reason that we are here at a pretty good time to start looking forward to that and start accumulating slowly, just like we have been in gold and silver, okay, in anticipation of what's to come. Also because oil is so crucial to the global macro that, much like gold and silver, it's a bit unique in that it can run up in times with other things not necessarily could. Just look at when everything started selling off earlier in the year, oil and oil stocks had a huge run all by themselves. They outperformed everything. And you could see that happen again in oil and gas. So it's definitely good to have some exposure in this sector. So let's get into the individual equities. Okay, we're going to start with Reconnaissance Energy here at the request of one of our regular viewers, Herman. And so if you look, we're just now starting to get a visual on the 200, which was previously invisible. We're just now getting 200 weeks to start developing the average. And it was likely support here, but it was previously invisible. So now that we have that, that's going to be a really good helpful indicator on a potential near-term support. So that's about $2.50. But you're overall in this downward descending channel here, and this is the weekly time frame. So it's possible that you could go sideways for a while and build strength before you ramp up and out. We'll have to see if this has a propensity to move with the oil price. Then it makes sense that it likely would do that very thing over the next month or two. Before oil eventually takes off to the next leg up. If you look at something like EOG, this is the remnant, the best part of the old Enron. Okay, this is Enron Oil and Gas, and this would have been one of the single best companies you could have bought in March 2020. Excellent dividend, excellent company. They have 10 years of premium oil fields, shale fields left, and just excellent. They're in excellent shape to make a lot of money over the course of the coming decade, right? So really what you're looking for now is just a good entry point. And, if you can get this liquidity event, if we can get this sell-off, it would be really nice to try to catch it somewhere around $100, right? Anywhere below $100 would be really sweet. Maybe we could touch that 200. That'd be very nice to see. So that's something to put on your shopping list. I think EOG should do very well. We're going to skip ones like Kinder Morgan. We're going to look at Exxon here. All right, so Exxon is kind of peaking. All right, and so I think Exxon's actually going to sell off because you have this divergence here on RSI, right? So you're coming up. You have to understand, first of all, retesting all-time highs. All right. And as you're doing it, you're putting in these bearish divergences. It makes sense in confluence with the rest of the market and everything else that we will at least probably sell off back down to this 200. Okay, it just makes sense to me. And it looks very similar to uranium because you'll see that it has divergences going both ways, right? And so it's bullish on the bottom. And so it's really telling you that you almost have a guaranteed bounce between each of these lines until it just stops doing it. So I would be looking to buy Exxon if you can somewhere around $85 and kind of hoping to get it, right? Looking at Occidental, it's the exact same thing. It's making the exact same divergences. So the divergences on top are telling you it's going to sell when it gets up here. The divergences on bottom are telling you it's going to rally when it gets down here. All right, so once again, you can hope ideally to come somewhere around $57 and make a nice entry point. This has been historically a very powerful level of horizontal support. And so it makes sense in this macro that it would do so again, especially with the 50 on the weekly coming up right at the same time. In addition to this ascending channel, I like it a lot. If we can get Occidental anywhere around $50, $58, I'm a taker. Okay, guys, let's check the precious metals. So silver and gold. Silver's breaking down. Quite the bad day. Down 4%. It hasn't lost this recent low yet, which was Wednesday the 28th, somewhere thereabouts. But you lose that, then clearly you're beginning to lose your uptrend, and we risk coming all the way back down to 1742 at least at the bare minimum. You would really hope to hold that, but if we don't, we already know where to look already, which is 1610. That is a knife that I would intend to buy. Same thing with gold. We've talked about this over and over. Really nothing has changed here either. You're hoping to hold this level right here. If you don't, it implies a massive breakdown in the market, some kind of liquidity event. Everything's probably going to sell off quite sharply, and I will look to catch the knife in gold at about 1550. So once the gold price hits 1550, I'll be looking at the equities, the miners, and I'll be going in and making my final bids to catch the knife. And what I anticipate will be the low, some kind of a V bottom, just like this in March 2020. Because whatever causes the sell-off, it's going to be the reason you want to own gold and silver in the first place. So knowing that well in advance, I intend to strike with confidence if that happens. It's great to follow up today for the gold and silver miners, because yesterday we pointed out this inverse head and shoulders across both gold and silver miners, okay, and the ETF. So that's a lot of really good confluence there that gives me a lot of confidence in the current support and price levels and momentum of the equities. So as bad as the day looks, you can see that all we're really doing is coming back to where we were the prior day, and we're just kind of rounding out sideways on what you would expect to do on the right side of the shoulder. So to me, everything still looks good. I don't see anything wrong with this, and it just blows me away the perspective that people have or don't have on days like this. This is why charting is so powerful, because it gives you the perspective. It helps you see what's going on, especially when you learn to recognize these patterns and see them in advance. You can see how things are playing out. It really helps you to see the big picture. And I will tell you that nothing has changed since yesterday. You are still on track to put in this potential pattern. If you don't, you will likely come down and retest this level. I don't anticipate losing these levels. Again, it would probably be a pretty quick flush down type event. I think that everything otherwise looks pretty good. So we'll just have to continue to wait and see what happens next. Oh, that got blown up somehow. What the hell happened to that? Let's come out on the weekly. Okay, so on the weekly, just looking at something like AG again, just look at this long-term chart going all the way back to 2008. This is a massive historical reference to, the price stability over time. And every time we have come down to this trend line, we have gotten nice rebounds, bounces. All right, and right now we're putting in this potential rounded bottom right here. All the confluence is there. We're going to get tested. Okay, we're going to get tested on this, but I'm holding strong. I'm holding true. I'm a firm believer in what's taking place here, and I think we will be vindicated in the end on these calls. They're going to age quite well. I will continue to use this entire range and opportunity to accumulate, okay, and to build up my positions as much as the market will allow me and afford me to anticipate what comes next, which is this massive run in the gold and silver equities. Look again, the confluence of these inverse head and shoulders, how pretty the patterns are, and the basing that we're doing. And the levels today, the sell-off that we're getting doesn't scare me at all, because you can look at the charts and see what it's doing, at least potentially doing. And so I'm not worried at all. I like what I see. Everything looks good. Nothing has changed. I think we're still on track. Hold tight. Continue to accumulate gold and silver. It all looks pretty good. By special request, we're going to take a look at a couple of others. Okay, guys, we're going to chart a few individual names by request of the viewers. So we don't talk about these too often, but we will today to help you guys out because you asked for it. So right off the bat, you can see that we got a pretty good horizontal right here in ADT. Right about there ought to do pretty good. Yep. And, we've tested it, lost it. But riding strong right now. This is the daily time frame. It looks kind of It's obviously having trouble getting above that 200, but the moving average is working its way up. So in the short-term time frame, that's pretty good. I will tell you that the RSI was giving you some clear divergences in the past, right? So it actually told you that a lot of these sell-offs were coming. All right, so if you're new to this equity, just take a look at that, because it was telling you that each of these big sell-offs were coming before that they happened, even this one right here. But that's already played out, and so now you really have to wait and see what it does next. So we'll zoom out on the weekly, and you'll see that there's confluence with the 50 on the weekly, with the 200 on the daily, okay? And it's having trouble getting above that. So right now, you would probably want to see if you can at least touch this trend line, and if you break it, you can probably buy the 200. That's about $1.75, okay? It's about 18% away. I don't know if you get that without the broad market sell-off, this liquidity event, but if it does happen, if it does come, that's your opportunity to buy at a much lower price. You're essentially going to be able to get it for somewhere around the February 2020 level, which is very reasonable, right? That's a pretty good level to be able to get in on a lot of these equities. So right now, I would hold and wait for the action next week in the broad markets and see, understanding the downside potential and looking forward to that as a downside target. You should probably at least be able to get the 204. We're going to look at I-80 also on the weekly. You can see that it's actually already sitting on some pretty clear horizontal right there, right? So that looks pretty good. If you were to buy right now, you're actually getting a pretty fair price, historically speaking. I mean, the chart only goes back to 2021 in April, but there's nothing wrong with the current price. You know, you're only off the bottom by 20%. So this is probably not the worst place to accumulate on this one. I will tell you that you might be careful on the weekly because you have some divergences. All right. And so that was telling you that you were going to get this sell-off, which might not be done. So I would say if you lose this trend line here, maybe try to buy at one of these points below. Okay, so that's 212, maybe $2. All right, next up is AYASF. This is charting very similar, you can already tell, to ADT. Okay, so you're kind of rolling over. You're struggling with the 50 on the weekly. You got the 200 just below, and it's kind of telling the same story. I think historically speaking, you know, let's see how far we are off the top. We got as low as 60%, so that's pretty standard. Now we're down 40%. That's pretty standard too. So it's not necessarily a great value here compared to the rest of the sector. But if we got this liquidity event sell-off, a lucky break for you might be about $4.45 to catch the 200 on the weekly. So that's what I'd be looking forward to. And the reason I'm giving you these ultimate big major downside prices is because the likelihood now of this Black Monday, you know, just really bad macro liquidity event is becoming pretty apparent. And so it looks like we might get that. And since the likelihood is so high, I'm going to go ahead and give you price targets to buy at the lowest price possible. Certainly a much lower than where we are, right? Just, I think if you were to strike at something like that, you'd probably make it out just fine, especially in terms of time, because once again, I think it will be a bit of a V bottom. So that's kind of my assessment right here, is that probably I-80 is the only one that's a good price right now relative to its history. The rest, you probably want to wait and see what happens next week because you do have a threat of breaking down a little bit lower in the near term. And now we will talk about agriculture. And this is exactly why I've been telling you it wasn't time to buy. It wasn't time to buy. You had to wait. You had to wait. And we're getting the rollover now. 9% in a single day in Nutrien. We've got a bit further to go. Now that we've gotten the sell-off, it makes sense that we're going to sell off a bit more, right? When you see this kind of momentum, it gives us a pretty good indication that, you know, we'll come down somewhere at least right here, right? That's about another 10% lower or so at least. We may come all the way back down to this $58 mark. It really just depends on how much the macro breaks down. We will watch this every single week. So when the opportunity presents itself, when we start seeing buy signals, we're going to catch them and we're going to know. But look what happened to Intrepid, another 9% down day, coming right back just like uranium, resting on the neckline of this head and shoulders pattern, threatening to break much lower, possibly all the way also back down to this trend line, which is still 30% away. We just have to wait and see. Again, it really depends on how bad the macro gets, how much the broad markets sell off, but it could be pretty nasty, pretty ugly, pretty brutal. There's plenty of room to fall on the RSI in all time frames. It's, you could easily fall down here and come down and be oversold on the RSI and get clear buy signals, right, on strong supports. Because you got to understand too, these are fundamentally good companies that you want to go own going into next year and beyond, right? Because we're going to have fertilizer shortages, potash shortages, right? All of these chemicals, we're going to want them and need them. So, the charts are doing exactly what we thought they would. We just had to be patient, wait for it to play out. It's playing out. So for agriculture opportunities, they're on the way. Just continue to be patient. We will monitor them weekly. And as soon as the opportunity arises, we will strike with confidence.